Hello there, welcome to ACCQ Continuing Professional Education. We're going to talk about income taxation. Medyo matagal-tagal na rin natin hindi na pag-uusapan to kasi puro accounting, puro financial accounting. But this time, we're going to talk about quite a updated topic in taxation, particularly dito sa corporate income taxation. So stay tuned. So like we said, we're going to talk about corporate income taxation. Ano yung mga salient features nito? Ano ba yung pati mga latest development, the CREATE law and these things, MCIT. So pag-uusapan natin about that, especially yung mga salient features. Actually, medyo malawak yung area ng corporate income taxation, pero magfo-focus lang muna tayo dun sa essentials, dun sa pag-compute ng corporate income tax, especially dun sa in a given year, dun sa kada quarter, first quarter, second quarter. So ito, tapos isasama na rin natin yung MCIT. So meantime, I'm going to show you yung sa screen yung ating mga the topic for today's session is about the tax on domestic corporations. So what are domestic corporation? So domestic corporation are entities organized and constituted under the Corporation Code of the Philippines. So baga dito siya itinatag, no? Dito ito yung charter niya sa Philippines, no? So these are domestic. As the title suggests, no, domestic, so within the Philippines. But for income tax purposes, it includes partnership. So hindi lang pala yung corporation as in domestic corporation. Like yung mga nakikita natin mga corporation dyan sa labas, yung mga whether it's retail, whether it is in manufacturing and so forth, no. Okay, so meron ring it also includes partnerships, no. So kasama rin yan as dun sa definition ng for income tax purposes. So now, no matter how created or organized, joint stock companies, yan, kasama rin yan, and joint accounts, cuentas and participation, associations or insurance companies. So ito, for the purpose of income taxation, pareho sila ng domestic corporation tax rate. Okay, so let's move forward dun sa term corporation. So pag sinabing corporation, it does not include, ito naman yung mga exclusion, no? A general professional partnership. So mamaya alamin natin kung ano itong general professional partnership. A joint venture or consortium formed for the purpose of undertaking construction projects. And a joint venture or consortium for engaging in petroleum, coal, geothermal, and other energy operations pursuant to an operating or consortium agreement under a service contract with the government. So I guess you can include here yung joint venture, no, yung joint exploration ng sa WPS. So incidentally, ano ba yung general professional partnership which is not included dun sa scope ng corporate taxation, domestic corporate taxation? Well, a general professional partnership is a partnership formed by persons for the sole purpose of exercising their profession. So halimbawa, mga lawyers, mga accountants, CPAs, mga doctors. So they to their practice of profession, mga engineers, architects, no? Okay, so this is for the sole purpose of exercising their common profession. So hindi sila kasama doon sa tax rate ng isang domestic corporation. So no part of the net income of which is derived from engaging in any trade or business. Basta dun lang sa practice ng kanilang profession. So kung architect sila, yung bang pagde-design lang ng bahay, kung mga accountant sila, of course, mga financial statement, mga tax return, mga paggawa ng tax return. So these are part of their yung bang practice of their profession. Okay, so moving forward, as we can see here, domestic corporations are subject to any or some of the following. So, bukod pa dun sa corporate tax, mamaya sasabihin natin kung magkano yun, no? Kung yung rate na yun, ito pa yung mga subjected ang isang domestic corporation. So, number one, itong capital gains tax. Yan. So itong capital gains tax. Incidentally, if you have not seen yet the video, I made a video here about capital gains. So you might check, you want to check it out. No? Final tax on passive income. So we're going to show that in a while. No? Regular corporate income tax or RCIT. And yung minimum corporate income tax or MCIT. So meron tayong example of these two. And the last one is yung improperly accumulated earnings tax. So ito yung improperly accumulated earnings tax. So from what I understand, ano siya, yung bang suspended siya ngayong panahon ng pandemic, no? So ayan. So i-take up natin ngayon yung mga final tax. Ayan. So these are the final taxes, no? Okay, and the first one, pag sinabing final tax, final na. Yun kasi final na yung pagpataw ng tax, no, nakabawas na yung tax doon, no. Okay, so ano ito? On sale of shares of stock of a domestic corporation not listed and traded through a local stock exchange or LSC, no? Hindi siya nandun sa PSC or dun sa Philippine Stock Exchange, wala siya dun, no? So held as a capital asset, no? So in other words, no, itong shares of stock of a domestic corporation, kumbaga sa labas siya trade outside of the stock exchange, the local stock exchange, no? So again, if you want to check that video, I made a video about capital gains, no? So that is 15% of the capital gain, yun yung kanyang rate, no? Okay? So pagka kumita siya doon, that's 15%. Now, dito naman sa letter B, so another tax which a domestic corporation is subjected to is on sale of land and or building held as capital asset. So regardless kung saan man yung location ng asset, so on the gross selling price or current fair value prevailing at the time of sale, whichever is higher. So that's 6%, no? Okay, so straight computation niya, no? Between based on the gross selling price or current fair value, 6%. So again, I made a video on this one dito sa capital gains, no? And then the next one is yung from sources within the Philippines on passive income. So kasama dito yung interest under the expanded foreign currency deposit system, no? So ito 7.5%. So pagka merong interest dun sa investment nila sa foreign currency, no? So that's 7.5%. That's final tax. And another one is 7.5% or 7.5%. No? The next one, letter D, from sources within the Philippines. No? Ito, passive income. Yung bang nag-generate ng interest. No? Okay, so interest on any currency bank deposit, yield or monetary benefit from deposit substitute, trust fund and arrangement, as well as royalty. So 20%. So kung mapapansin mo, let's say if you have a deposits, let's say sa isang bank or any bank here in the Philippines, so pagka kumita yon ng interest, no, yung interest nun automatic meron ng ibabawasan ng 20% yun. So In other words, kung 100 pesos yung interest na yon, so i-debit yung 20 pesos because that would be yun yung final tax na dun sa passive income, yung 100 pesos. So 80 na lang yung yung pinaka yung bang kinita mo doon, tinanggal na yung tax. So final tax na yon, no? Okay. So and letter D is dividend from domestic corporation. So ito yung mga intercompany dividend. So from domestic corporation to domestic corporation, no? Okay? So natanggap na isang domestic corporation coming from a domestic corporation exempt from taxation. Okay, and then the net taxable income net from all sources within and without the Philippines. Ayan. So for example, yung Jollibee meron sila ditong operations. So si Jollibee is a domestic corporation. So meron silang operations dito. Meron din silang operations abroad, no? So yung operations sila abroad, no, kasama pa rin yun within and without the Philippines. So net income, taxable income from all sources within and without the Philippines, no? So yung doon, yung kanilang regular corporate income tax, no? Sa lahat ng domestic corporations is 30%, no? Okay? Now, because of the pandemic, itong global pandemic na to, it was reduced. Yan. So nakalagay dito, reduce corporate income tax. So the CREATE Act lowers the corporate income tax rate from 30% to 25% beginning 1st of July 2020, where the corporation's net income does not exceed 5 million and its total asset do not exceed 100 million. Ayan. Okay, so ang kanilang tax rate is 20%, no? So from 30% magiging 20% na lang. Matay bagay na rin yan, no? Okay, so for non-resident foreign corporation, the tax rate shall be 25%, no? So beginning the 1st of January 2025, no? Ito yung mga non-resident, no? Okay, so 25%. So take note of that, no? Okay, and then sa mga proprietary educational institution and hospitals, yan. So the applicable income tax rate for proprietary educational institutions and hospitals shall be 1%. So previously, it's 10%. Okay? 10%. Yung sa mga, especially sa mga schools, no? So 10%. But because of the pandemic, because yung mga estudyante, they are at home, no? So, and of course, the medyo nag-decrease yung enrollment. So, as a recovery, part of the recovery program. So, from 10%, ginawang 1% na lang, imposed on their taxable income beginning 1st of January 2020 until the 30th of June 2023. So, hopefully by that time, no, they would somehow regain, no, yung enrollment, no. Okay, so and then the next one is the minimum corporate income tax. So this is the what you call yung MCIT, no. So yung MCIT from a rate of 2% naging 1% na lang. So mamaya papakita natin yung computation na to. So this is beginning July 1, 2020 until the 30th of June 2023. Yan. Okay, so much for that. Okay, so yan. So yung sa naman dito sa corporation, sa beginning 4th year from the start of operation. So sa ika-4 na taon ng isang korporasyon, no? Okay, so kukumputin yung kanyang regular corporate income tax, which is 30%, but at this time 20% na lang, no? Okay, versus yung sa MCIT na 2% yung dati, yung before the pandemic. So ngayon 1% na lang, no? So we're going to compute for that one. Okay, so this one, so we prepared an example here. Yeah, so a domestic corporation in its 4th year of operations had the following data on transactions in each of the 4 quarters of a taxable year. Yan. So ito yung kanyang data, no? So first, second, third, and fourth. Yan. So yung gross profit niya from sales 500,000 sa first year, second year is 350, third year is 800,000, and yung sa fourth quarter, I should say quarter pala yan, no? These are not years, these are quarters. So first quarter, second quarter, third quarter, fourth quarter. So sa fourth quarter, 900,000, no? So yan yung ano niya, yan yung kanyang sales, no? Gross profit from sales. And then yung dividend from domestic corporation, so this is 20%, 20,000 sa first quarter, and third quarter is 20,000. So makikita natin every other quarter, no, yung pag receive ng dividend, no. So ano ba sabi natin kanina? Exempt. Okay, from domestic corporation to another domestic corporation. And then interest on bank, of course ito final tax to, hindi rin siya kasama doon sa pag-compute ng normal corporate income tax. So hindi rin siya natin isasama. Pero meron siyang operating expenses. So first year, 450,000. The second year, 340,000. Third year, that's 810,000. And the last quarter, year ako ng year, no? Quarter. Okay, quarter. Okay, first quarter, itin natin. Okay, so first quarter, operating expense for the first quarter was 450,000. Second quarter is 340,000. Third quarter was 800,000, 810,000, and fourth quarter that's 450,000. So ang requirement is compute for the income tax due at the end of the first quarter, second quarter, third quarter, and for the year, no? So gagawa na tayo. Ito, solution. Yan. Pinakihintay mo. Okay, so ganito lang yan. Madali lang yan, no? Copy. Yan. Pause. Yan. So, yun natin, paste. No? So, dito sa first quarter sale, no? Tanggalin muna natin to. Yan. So, meron siyang 500,000. Tapos, ililess natin dito yung, I hope you can see it, no? So, ilalaki natin. Yan. Yan. So, we're going to refer to the problem from time to time para makita mo. So, yung gross profit, makita mo dito is for 500,000 dun sa first quarter. Now, domestic, like we said, from a dividend from a domestic corporation, this is exempt. So, hindi natin siya kasama. It doesn't form part of the computation for the corporate income tax, so we will not include this one, no? As well as the interest on bank deposit, we will not also include this one because this is final tax. So what we will include is the operating expenses. So lalagay natin dito less operating expenses. Yan. Okay, so let's see kung magkano dito. So that's 400,000. Copy. And paste. Yan. Okay. So kunin natin yung difference nila. So kunin muna natin ito para dito sa ano. So this is 500 less 450,000. That would be 50,000. What do you call that? That is taxable income, no? So ito yung basihan ng ika nga ng 20% natin. So gamitin na natin yung create law, no? Okay, so under create law. Okay, so this is the taxable income, no? Total, we're doing this in 2021, no? Okay, so yeah. So, kasi pagka nag-file ka for next year, for 2021, that should be under create law. Okay, so this is, lagay natin muna dito. Yan. Okay, so this is the taxable income. Now, so minimum corporate income tax, so let's put here minimum corporate income tax, abbreviation na lang, ha. Yan. So this is magkano ba yan? So ano yan? That should be dati, that is 2% of the gross profit from sale. Pero ganito yan dati, no? So this one, no? So ito yung basihan yan dati. Nung wala pang create law, 0.02. However, nung nagkaroon ng create law, we will reduce this to only just by 1%. by 1%, no? So 1% na lang siya. 2 minus 1 is 1, no? So times 0.01, so that is 4%. So 1%, no? So this is 5,000. So from 10,000 naging 5,000 na lang yung minimum corporate income tax niya. Pero titignan mo kung sino yung mas mataas between taxable income and the corporate minimum income tax. So tignan muna natin yung sa normal corporate income tax. So normal corporate income tax. So magkano po siya? We will base it from the taxable income. So take note of that. Now, minimum corporate income tax was based from the gross profit from sale, while the normal corporate income tax was based from the taxable income. So before it was 30%, so just multiply this by 0.30. But because we have to update our computations, it's because of the pandemic, no? Okay, kailangan no? So angkop sa ating in this time, no? Okay, updated siya. So we will only compute this taxable income by 20%. So times 0.2, so that would be 10,000. Okay, so we'll get the ano yung mas malaki dyan. So whichever is higher between minimum corporate income tax and yung normal corporate income tax shall be the what you call the whichever yung gagamitin natin. So whichever is higher. And okay, so between these two, obviously the higher between this is the normal corporate income tax. Okay, now we will whichever is higher. So we will now deduct this by the income tax paid. So income tax paid. Okay, so these are the income tax paid. So the first quarter, yeah. So wala pa. So just put here this 0, no? Okay, so ganyan lang. Ayan, no? Okay. And so lagay natin parang ganyan. Okay, now in the second quarter, so of course wala rin yan, no? So second quarter, lagay mo lang dyan second quarter. Just for the format lang, no? Third quarter. Yan. Okay, and then the last quarter or the income for kasi by the fourth quarter i-annualize na yan. So this would be the income tax due. Income tax due. Yan. Okay. So iano natin since wala pa naman tayo sa second quarter, wala pa naman sa third quarter. So the income tax due should also be 10,000. Okay? So you bring down the computation here, so it would be 10,000. Okay, so kunin natin yung yan, tapos double rule, no? Okay, so accountants don't just rule, they double rule. Yan. Okay, so after which, so 10,000 yung income tax due natin for the first quarter. So let's proceed now to the second quarter. So the second quarter is 350,000 yung kanyang gross profit from sale, no? So i-accumulate natin yung computation kasi cumulative yan pagka yung bang quarterly. So this is 500,000 plus yung 350,000 yung nandun sa yung sale dito, gross profit from sale for the second quarter, no? So yeah, so 850 lahat, no? Okay, so first plus second 850, no? Tapos yung operating expenses natin, yung first quarter was 450,000. Okay, and then we add the operating expense from the second quarter of 340, so that would be 790. Okay, excuse me. Okay, now we proceed now to computation here, no? So compute lang natin to. So 850 less 790 would be 60,000, no? So, iyan muna natin siya. Line muna natin. Kunin natin yung ngayon yung minimum corporate income tax. So, the minimum corporate income tax is based from the gross profit from sales. So, multiply this by 1% since under create law. So, this is 8,500. Yan. And then yung sa naman, yung sa normal corporate income tax, so this is 60,000. So multiply this by 20%, correct? So times 0.2. So this would be 12,000. Ayan. So kukunin natin ngayon yung mas ano rito, no, yung mas mataas dito. So obviously, the higher between the minimum corporate income tax or MCIT and yung normal corporate income tax or NCIT, normal. Okay, so yung yung sa normal corporate income tax, no? Now we're going to from here we're going to deduct the income tax paid nung first quarter. So ililess na natin siya. Ayan. So this is ito yung yung bang pang-accounting na sulat, yung bang para siyang merong nakaano siya, yung bang anyari diyan, no? Okay, anyari. Yan, yung meron siyang wala nang symbol, wala nang peso symbol. Just a yung bang yan. Yeah. And I guess yan, this one is good. Yan. Okay, so for 10,000, so tatanggalin na natin yung decimal places. So yeah, for 10,000 yan. Okay, so ganyan din. Okay, yeah, maganda dito sa Excel yung medyo format mo. So, yan. So from there, ayan. So from 10,000 na yan, so since second quarter wala naman, tapos third quarter wala pa. Okay, so ikukunin natin yung tax due, income tax due. So this is 12,000 plus na lang natin kasi negative naman yung isa. So yan, 2,000 pa rin yan. Yeah. That is what you call yung law of mathematics. Okay, so iyan natin, igulang natin yan. Kasi kung iano natin yan, kung 12,000 less 10,000, baka tayo sagot na. Yan. Sige, try, sige, ganyan. Sige. 12,000 less 10,000. 22,000. So, okay. Okay. Yan. Okay, so let's proceed now to the next third quarter. Okay, so the sale for the third quarter is 800,000. 800,000. 800,000. So 800,000 plus this one, yung previous. Okay, so yung cumulative from first and second plus yung sa third quarter of 800,000. So that's 1.650. Okay, and then we deduct this from the operating expense, cumulative operating expense from the first and second and from the third quarter. Okay, yan. Okay, now how much is this one? Okay, so let's get the balance. And so deduct this, we will get this one. Okay, so this is 50,000. So kulong ulit natin siya. Yan, linya lang yan. Yan. So pagka-linya dyan, so yung minimum corporate income tax is based from this one. So times 0.01 under create law. And so that's 16,500. And then yung sa naman, so normal corporate income tax, so taxable income times 0.2, which is equivalent to what you call this 20%, no? So ito kanina is 1%, tapos ito 20%, no? So obviously mas mataas na ngayon yung MCIT, no? Na 16,000. So we will use that as our yung bang whichever is higher, no? So this is 16,000. So base dun sa MCIT. Okay, now kunin natin yung mga yung sa first quarter. So sa first quarter is, yan. Yan. Kala nyo may tinitignan ako dito. Actually, ganoon na nga. Okay. So, okay, so this one, lang, glass at kumbaga sana, we don't choose that as, yung lagi natin tinitignan. Yan. Always of pa. Okay. Yan, so ito, 10,000. Yan. 10,000. So second quarter, magkano? So kukunin lang natin yung second quarter dito, no? Okay, so i-less na rin natin siya. Okay, para makita nyo. So, okay, kunin natin yung format niya. Yan, para 2,000. Yan. Okay, so after getting that, so we will now, sa third quarter, of course, wala kasi third quarter yung complete natin ngayon. Okay, so kunin lang natin yan. So again, we add this one, yung, okay, like signs. Yeah, so this is 4,500. So this would be your, the tax due at the end of third quarter. Now, for the last quarter, so kunin natin yung gross profit from sale, that's 1,650,000. I-add natin yung sa fourth quarter, which is ito, yung 900,000. So that would be 2,550,000. So kunin lang natin ngayon, i-less natin from the cumulative operating expense of 1.6, saka ito yung 450,000. Ayan, so that would be yan. So kunin natin yung difference, this one. So this would be 1.4. Okay. Ayan. Yan. Yan. So, tama ba? Ito, this one. Yan. Sabi ko na nga ba nahalataan nyo yun no? Okay? Minus yun pero add yun, okay? I-add natin yung, operating expense as of third quarter and the operating expense from the fourth quarter. So, the cumulative or the operating expense for the year was 2,050,000. So the difference between the gross profit from sale and the operating expense was 500,000. So you just get the minimum corporate income tax based from the sale of 1%, 0.01. So this would be there, 25.5. Now, from there, we will get the normal corporate income tax, so times 0.2. So this would be 100,000. No? Okay, now, of course, the higher between these two, the minimum and the normal, you would get the normal, no? Okay, so whichever is higher, so that's 100,000. So you deduct all the first quarter, the second quarter, and the third quarter. Okay, the third quarter tax due of 4,500,000. So we just get the format here. Okay, so after getting that, so we just simply deduct all those 3 quarters from the cumulative tax na 100,000. No? So you still get 83,500. So this would be the tax due for the year. So 83,500 is the income tax due or the corporate income tax due for the year. Okay, for the fourth quarter, no? Kasi nabayaran na itong 4, 5, 2,000 and 10,000 dun sa previous quarter. So if you have any questions, you may ask or comment or maybe suggest any topic that you want. No? So yeah, if you want to suggest any topic, you may do so. But of course, subscribe, share this information if you find this useful, and of course, like. Okay, thumbs up. No. Okay, and God bless and stay safe.